Welcome. Let's take a look now at some of the events to watch out for us traders on Friday, the 16th of February. And for this, I want to begin, first of all, with the economic calendar. Here in the UK, we have retail sales. Now, if the retail sales reading in the UK is anything like what we saw in the US on Thursday, we're expecting a weak number. And a weak number could well be what we end up getting. It's traditionally a weak month anyway, January, after the recovery from the spending over Christmas. But it's particularly difficult this year because of the high cost of living. The cost of living expenses in other areas of the market means that people either aren't going out shopping as much as they had been previously. Certainly discretionary shopping is certainly seen as having pretty much dried up, or certainly well off the boil. And retail sales generally are expected to see that if people have been buying, they've been buying knockdown price goods, which of course has all sorts of ramifications for profitability for companies in the sector. So retail sales, the month of January, looking there potentially on the risk, on the possible downside for the numbers. Then later on in the day, we get producer prices in the States and the Michigan Consumer Sentiment Index. For this, I want to take a look at what's happening with the sterling dollar trade. Now, you'll remember from the evidence that we've just seen for GDP here in the UK on Thursday that the UK is now, technically speaking, in recession. It's a very backward-looking number. We're getting data through for the fourth quarter, and it's the first reading of the fourth quarter. So we've got two more revisions to come through, taking us into what is essentially the back end of last year. And the economy at the moment looking as though a technical recession is definitely what's going to end up being the case. We had a contraction of 0.1% in the third quarter of last year and a 0.3% contraction in the final quarter. So that's why we've seen sterling on the way down today. There's a little bit of a regrouping around a possible upside surprise today for sterling on the back of that weaker than expected US retail sales number. We have seen a little bit of buying of sterling. But to be quite honest with you, I think I'm more inclined to suggest that perhaps possibly maybe we're going to get a break of this line down here of 125.18, which is the low point we had back on the 5th of February this year. Candle closed below there. You're then on the way down to the 124 level and the 123 level below where we are there. Let's take a look now at what's happening on the corporate agenda. We've got NatWest coming through with earnings on Friday morning. It's the first of the UK major banks that we've got. Next week, we've got HSBC, we've got Lloyds Banking Group, we've got Barclays, and we've also got Standard Chartered as well next week. But NatWest will start the ball rolling in the banking direction. Full year numbers. We are certainly looking for an improvement in some aspects of the business, but at the same time, interesting to see just how much more money NatWest feels it has to put aside for bad debts as people find they're going tough on high interest rates. Also, we've just been hearing about a new appointment as the chief executive of the company after the Farage debacle. Switzerland, we've got Swiss Re on full year numbers. Let me just take a look at what's happening with the stock of Lloyds Banking Group. In the last couple of days, we've seen a little bit of an uplift away from the lows that we had. That low is at 203.4 pence. Now, that could well act as support if we get a bad number out from Lloyds, from NatWest tomorrow. NatWest includes the old RBS business. But if we do get some upside surprise, your stock goes underneath the 210 level with the view to taking this stock up. It'll be interesting to see what happens tomorrow morning at 7 o'clock when the company comes through with that early morning release. That's it. We'll be back at 7:30 with the early morning call tomorrow as we set you up to the European trading day ahead.